Hey guys, all content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Stocks ended quite mixed after a pretty volatile trading session. The S&P 500 and Nasdaq both ended red, but the Dow ended slightly green. Crude oil prices made markets shave off some of their earlier gains, and then after new economic data from China was weaker than expected, investors became weary. Their data showed that retail sales dropped 11.1%, the biggest decline since March 2020. The worry of economic downturn amid price pressures and increased borrowing costs remains the biggest worry for investors and the markets in general. Disappointing data keeps on piling up, and that is making investors more and more pessimistic about the near future. Stocks are likely to go much lower in my opinion. The combination of a strong labor market and high inflation will increase the likelihood that the Fed will increase rates, which, as we have said, it could bring a direct recession as of itself. The Fed is not going to come to rescue the stock market like it did in 2020. They are going to do what they have to do in order to fix the economy, which means letting stocks fall where they may. Until markets gain some comfort on long-term rates, you should not see strong bullish permanent gains. What is most alarming to me right now is Ben Bernanke, who was the former Fed chairman who guided the country through the 2008 financial crises. Bernanke called the actions of Jerome Powell as a mistake, saying the Fed made decisions to avoid shocking the market but which allowed for a permanent mark which has now completely screwed things up. According to Bernanke, the U.S. economy could enter a period of stagflation, which is the combination of economic stagnation and high inflation coupled with high increased unemployment, something we have been talking about since February of this year. I am super happy to see that it wasn't just me coming up to this conclusion, and that Bernanke, former Fed chair, also sees exactly what I do. The Fed is set to engineer a cooling of the economy in the next couple of months, so we will see how that goes, but if there is anything I have learned from their leadership is to always expect the worst. GameStop nor AMC made any big announcements today. At our Discord, I issued a total of 10 alerts today, with some running well over 20% after they were issued. Come check these alerts out if you are interested in day trading and getting notified by the best stocks. Links is in the video description. Let's now talk about today. The Fed submitted over $1.833 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 55% of the total volume today, while dark pool trades for GameStop accounted 52% of the total volume today. AMC had a bearish performance, losing under 1% for the day. It opened to a dip that took it from 11.90 to 11.55. After this dip, AMC began running, moving over 12.60 before retracing back and losing all its gains to test support at 11.50. After this dip, AMC moved up a bit to close at 11.71, below the VWAP. GameStop had a bearish performance, losing over 6% for the day. It dropped from 99 to 94. It attempted to bounce up past 99 but it failed, so it ended up retracing, eventually closing at 91.80, below the VWAP. Come and join my Discord for more content, the link will be down in the video description. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.